Stocks move in a narrow range, manned ahead of May Day and rest. Amid expectations of an India-US trade deal, realty and healthcare are the prominent gainers, while consumer durables and financials drag.
Bajaj Finance skids after it pairs its guidance on growth and return ratios. Stock boosters like a 1:1 stock split and a 4:1 bonus issue fail to prop sentiment.
A day after IndusInd Bank's deputy CEO stepped down, CEO Sumant Katpalia resigned, taking responsibility for the derivatives deviance. Till then, a new CEO steps in. A committee of 2 executives will run the show.
US President Trump points to a likely trade deal with India. US Commerce Secretary Howard Lutnick says a trade deal will be announced soon. Even US Treasury Secretary Scott Bessent joins the chorus.
You're watching us here live on Halftime Report. I'm Mangalam Malu. We come to you live from the CNBC-TV18 Motilal Oswal studio. And after nearly 6 months, we have, Ekta joining us as well. Obviously, she anchored the show yesterday, but the first time Ekta and I come together on Halftime Report in 6 months. In the interim, though, in your full disclosure, I must say, we played a couple of games of paddle. So here's my paddle partner, Ekta. So I hope the chemistry from the court comes back onto onto the studio as well. And that's where all the synergies happen, as they say in business.
Well, absolutely, Mangalam. I only have one thing to say, that we're the winning team, and that shows on the court and off the court as well. But nonetheless, it's been 2 days of consolidation right now in terms of the markets. As you can see, the Nifty is just about buying time at this point in time. We have the mid caps also just about higher by around 0.2%. It is a lot about stock-specific action this afternoon. We do have financials, which seem to be a big bunch, which is in focus. So, for example, Bajaj Finance reacting to its guidance, its credit cost guidance, which it didn't manage to meet in the fiscal. We have IndusInd Bank because of the resignations that have taken place there. State Bank of India is in focus on account of its numbers coming out on the 3rd of May, and separately fundraising that they will be considering on that day as well. Reliance Industries, watch out for that stock. It's up 7% on a week-to-date basis. So Reliance Industries in focus, and separately something like a Paras Defense. All the defense stocks have been focused, and that continues to surge up around 35% plus on a week-to-date basis. But you have a lot of stocks to focus on. Let's in fact focus on Trent. The company reported a 28% year-on-year growth in its Q4 revenue. Margins expanded, but the growth in their fashion like-for-like business disappointed. Mangalam, tell us more.
That's correct. So Trent surged after the numbers yesterday, and that was on account of the margin beat that came by. But thereafter, once the market closed, we had the presentation that came by as well, and that told you that the like-for-like growth in their fashion business was mid-single digits, and that tells you that maybe the street was slightly disappointed with that. Though the company has clarified, given the density of store opening that they are doing, maybe there could be an element of cannibalization. If you're opening stores across each other or very close to each other, then chances are that maybe there would be some cannibalization. So the appropriate thing to do would be to look at overall revenue growth as against just the stores itself. That's what they've said. But there have been a couple of growth drivers and, green shoots in Trent as well. The most important one is the growth that we saw in their beauty, personal care, innerwear and footwear business, which are now contributing 20% to their sales. Online, where they've been fairly, measured out here. For Westside, it contributes about 6% of sales. Zudio isn't online. Star Bazaar saw a good growth in their revenue, even though LFL growth was just 2%. The thing that stood out was contribution of own brands was nearly 70%. So that is a positive. On the back of all of this, we've had management speak about all of this, and we had brokerages write too. Morgan Stanley, for instance, is positive on the stock. They believe that there have been inventory write-offs, and that has impacted gross margins. Jefferies, on the other hand, they've also increased their target price, and they have a hold rating. They believe that on a steady state, the company can compound revenue over 35% over the next 3 years. Just a word on the stock valuations, though. It's down about 35% from the peak. At peak, people argued about the valuations. It traded at around 111 times. Now it's trading at around 71 times. Not particularly cheap, but definitely cheaper than what it was at the peak.
Okay, all right. So that's on Trent. But we do have Schaeffler India, which is buzzing as well after a strong quarterly performance. Sudarshan is here to tell us more about Schaeffler India and what's keeping the stock in focus today.
So it's a strong set of earnings from this auto ancillary company, and it's the fourth straight quarter that company has reported more than double-digit growth in a quarter. If we talk about the revenue, it was up 16%, EBITDA was up 19%, margin too has come in at more than 18%, and domestic business was up 13%, but it was largely led by the export business, which was up more than 23%. Its biggest segment, that is the bearings and industrial solutions, that saw a growth of more than 13%. Another major segment, that is the automotive technologies, which forms nearly 33% of its revenue, that was also up more than 15%, and other two segments also saw a growth in the range of 15 to 20%. I remember same quarter last year, two of their four segments had seen a growth decline, and from there now company posting a double-digit growth in all the segments is a noteworthy, and that's the reason you are seeing a big move in the stock price today.
Take that point, Sudarshan. Thanks a lot for that. Meanwhile, just before we move ahead, would like to keep an eye out on Varun Beverages. Reported numbers just a short while ago, but more importantly, the stock, while it has taken a bit of a nosedive, will be enthused to know that the organic volume growth for the company this time around in India has been 15.5%. Consolidated sales volume grew by about 30%. They've said that the integration of the SA territory has progressed well, and that has seen a growth of over 13% from the same time last year as well. Add to all of this, they've commenced their operations at the new greenfield production facilities in Himachal Pradesh as well as Uttar Pradesh. All of them would enhance their capacity ahead of the peak summer season. So it's not the previous quarter which is as important for Varun Beverages, which has been good in terms of volume growth, also led by, Mahakumbh, where Coke also did say that they've served over 180 million cases this time around. But for the quarter that is ahead, because of the heat wave, we might see strong volume growth on account of increased capacity for the company as well. So the stock, which is currently seen a nosedive, will be very interesting to see if the street looks past that and we see a recovery on this one or not. That's about Varun Beverages. But let's move on to a CNBC-TV18 exclusive. Sources tell CNBC-TV18 that general and health insurance CEOs will have to meet the DFS secretary on May 7th. For what? Yash joins in.
Well, Mangalam, as you rightly pointed out, all general and health insurance CEOs are expected to meet the Department of Financial Services Secretary M. Nagaraju. Now, there is one very important demand which is expected to come from all the general and health insurance CEOs, and that is with respect to removal of the obligatory premium which currently all the general and health insurance companies pay when it comes to GICRE. What happens today, just to quickly explain, on every health insurance or any other general insurance policy sold, 4% of the total premium collected has to be paid to GICRE, and of course reinsurance for that policy is secured against that 4% premium which is paid. General and health insurance companies are expected to ask the DFS secretary and hence the government to remove this obligatory premium of 4%. Now this is as far as the demand is concerned, but the story behind the demand for GICRE is a big negative, because just in FY24 GIC collected about 1500 crore rupees in the entire financial year from obligatory premium itself. If this is to be removed, that 4% obligatory premium, it could be a big dent as far as GICRE is concerned, considering it'll lead to a removal of that 1500 crore in a scenario where the competition in the reinsurance sector is only increasing as against the foreign reinsurance players as well.
Okay, but Yash, give us more information about your story, where sources tell CNBC-TV18 that general insurance industry will launch a new awareness campaign next week. Give us more details on that.
Well, we've heard enough of mutual fund sahi hai, and it seems like now the general and the health insurance industry on the lines of the campaign which was undertaken by India's mutual fund sector is expected to take a similar campaign for itself. What we've been given to understand is that this new awareness campaign will run with the tagline of Acha Kiya, Insurance Liya. A total of 120 crore is what is earmarked for the first year itself. When it comes to the contribution towards this insurance campaign, as far as this 120 crore is concerned, it will be contributed by all general and health insurance companies, and it will be proportional to the market share which they currently have as far as the entire sector is concerned. Awareness campaign in its first year will focus on health, motor and home insurance, and as far as the campaign rollout is concerned, it is expected to happen in the first week of May itself. Initially, the awareness campaign will focus on IPL matches, and once that gets done, then it will be rolled out across all the general entertainment channels.
All right, Yash, thanks a lot for that. You said Achha kiya insurance liya. I would say Achha kiya bata diya. On that, we'll take a short break. And as we speak, Varun Beverages as a stock is recovering from the lows after the initial drop that it saw post numbers on account of the volume performance and perhaps on account of better season being ahead for the company. We're seeing a recovery on the stock. Take a short break. On the other side, Ashok Atluri of Zen Technologies joins in to discuss the trends in the defense sector. That space was a buzz all of yesterday.
Today, 6 years on, a much more real possibility going to the Lal Street listing. Work has already begun on that.
We have started that work. The question keeps coming. I would say sometimes unfairly because we are a young business. We get compared with other companies which are higher vintage. We are more serious about it today than at any point in the last few years.
Given the fact that you have expansion plans at this point in time, what are we talking about in terms of the kind of capital that you will be deploying in the next few years?
So we've publicly announced our plans to deploy close to 1,500 crores across not just capex but generally investments in totality across renewables and electronics. I would say we're halfway there. Time for Indian manufacturing is here to stay. I think India can become a $1 trillion economy in manufacturing alone. What is happening today will probably happen only once in our lifetime. In terms of the shift that is happening globally, will hopefully create a bright spot for the economy.
Welcome back. Well, for the markets, it's quite quiet at this point in time. We have the Bank Nifty. Like I mentioned, the financials are underperforming today, so down around 0.6% currently for the Bank Nifty. Advanced decline ratio as well is currently at around 1:2 on the declining side, so favoring the declining stocks at this point in time. But let's talk about defense because that seems to be the big theme that is playing out. As of 2024, India is the 4th largest defense spender in the world. India aims to become the 3rd largest defense spender globally by 2047, following US and China. To talk more about the opportunity in the defense sector, we have with us Mr. Ashok Atluri, who is the CMD of Zen Technologies, joining in on the show now. Mr. Ashok, thank you very much for taking the time out and speaking with us. Well, if you could just start by giving us a sense in terms of the near and the now. Is there any sort of incremental increase in terms of, say, order inflows, queries just in the past couple of weeks based on, all the geopolitical developments which have taken place in India itself?
Yeah, I think we are waiting for the government of India to, give us instructions on what to do, what actions to be taken. But we are completely on standby at this point in time. And the government is, seized of the matter and they are having discussions. Whenever they require anything from the industry, not only Zen, but the whole of industry is absolutely alert and on standby.
Yeah, that they are on the standby, Mr. Atluri, but the thing is that, typically if and when these things happen, they don't, immediately amount to any sort of business from a defense company standpoint. The street is abuzz with maybe perhaps increased orders, etc. for the next couple of years, stray incidents notwithstanding. We'll keep an eye out on what takes place in terms of immediate developments at the border. But from the defense industry standpoint itself, if you could give us a sense of, what sort of ordering activity have you seen for the industry in the last couple of quarters, and what kind of execution lies ahead for players like you and others?
Again, we said that, we are expecting, last quarter we said that some orders we were expecting the first quarter, our expectations still remain the same. But overall, even the industry is, It's a very, very positive vibe at the ground level. And we think a lot of orders are going to come the way of the Indian industry, we can feel that, and we are interacting with the government. And I think to your answer, the answer is the vibe is very, very positive, and we expect orders to come through to the Indian industry.
So you, I remember, had said that by the first quarter FY26, you would have 800 crore worth orders coming in. You still hold on to that. Is there a possibility of a delay there?
So I had said for the first half, I had said that we should be having 800 crores. Yeah, there is no revision in that expectation.
Oh, okay. Just give us a sense in terms of, you have closed the year with a record profitability as well as an order book. Do you expect this kind of momentum to continue for the next couple of years? Give us a visibility, probably not only for the next 1 year, but what might be the 5-year plan for the company in specific and the vision that you might have?
What we projected in the past is that in the next 3 years, of starting FY26, 27, 28, we would be getting orders worth about 6,000 crores. And we should be, able to execute them. So that's our expectation in terms of the next 3 years. And there may be a difference in a year, there may be a dip in a year, but, overall, I think we are on track to achieve that CAGR of 50% that we have been saying. On an average, that should be achievable.
And financial year FY25, you will end with that 900 crore guidance. Qualitatively, you can say that, right?
We haven't revised that guidance at all till now. So,
Got it.
Yeah.
And what about you reducing the gap between Zen and the acquired company's margins? Because you had made a couple of acquisitions earlier as well, on which we had this conversation on the channel. You said that going forward, you will reduce the gap between them. By when do you expect to do that? And what is your margin prognosis for FY26?
Most of the companies, for example, our naval simulation company, the marine simulation company is focused on the marine market. Now, when they shift to the naval market, I think we'll have better margins, not only in India, but globally we'll have better margins. And we expect the alignment to take in the next couple of years. So I think by FY27, 28, we should be completely aligned.
Okay. What is your sense in terms of R&D? Because you have been investing, I think, around 80 to 100 odd crores in terms of research and development. What was the total investment that you can share with us as of, say, even the 9 months gone by? And what are you targeting when it comes to the next year odd? And how would it probably play out in terms of a P&L, say in terms of sales or say in terms of EBITDA?
In a couple of years back, we were doing about 20 crores. Now, I think we're slowly moving towards 50, 60 crores kind of thing. Again, it is not as a percentage, but as an opportunity that we get something, we think that it has a large market with the Indian Armed Force, we invest in that. So I think the EBITDA margins, again, we have been saying that EBITDA margin, we expect to be around 35%, and that has not been revised. And again, on the PAT margins, we want to hit at least 25%. So these are the two things that guiding our decisions on more and R&D. Again, these margins are possible only because you have tremendous amount of IT investment that you already done over the hundreds of crores over the past few decades. So they are now paying off us with, we compete with the world's best companies, but still we are able to maintain these margins.
All right. And the drone opportunity, if you could give us a sense on what your market share currently is, what are the likely orders one can expect over the next couple of years from the industry standpoint, and how much are you likely to win from them?
So in terms of drones, we are just, we have acquired a company called Vector Techniques. They are big into the drone ecosystem, and they will be supplying the motors, the other part, the controllers, etc. So we are really completely aligned, and we are trying to build up their capacity. That was the whole point of the acquisition, was building the capacity so that we can become an essential part of the drone ecosystem. So we will probably be giving those numbers in the when the earnings call come, exactly what will be the kind of expectation from the turnover from those companies.
Okay. You also won an order recently, I think it was on the 27th of March itself, just about a month ago, for the air defense combat simulator for the L-70 gun. I think it's worth around 150 odd crores in terms of an order. Tell us about what the pipeline is looking like in terms of incremental order inflows within this particular segment and how lucrative it might be.
That IADCS is integrated air defense combat simulator. So that's for the L-70, which is a weapon that's used worldwide. I think there are about at least 40 to 50 countries that use this. So we were able to make a simulator for this, and it's very, very effective in terms of, instead of sending missiles worth lakhs and crores of rupees, you're actually getting the same kind of practice without using anything. So the demand for this is very huge, not only in India, but across the world. And, again, we think that there are similar kind of products that are there, and other air defense systems that we can make simulator for. So there is the buying narrative is very, very powerful, that, the savings are immediate, so they can see the benefit of the simulator. Unlike some places where people say, where is the benefit? So yes,
Okay.
Yeah.
Well, just taking that point forward, exports now comprise of how much of your order book? It was around 35%, say, a year, 2 years ago. How much is it now?
30 to 40% of the total turnover, yeah.
40%. And when you talk about exports and when you talk about the kind of demand that you're seeing globally for these kind of products, what is the kind of order inflow that we expect on the export front?
Again, we have been saying that between 30 to 40% is going to be exports. I think we will be able to maintain that ratio on an average in the next couple of years also.
All right, we take that point. Thank you so much for joining in. Just once again, if you could revise your break-even point for us, because your business is such that once you hit the break-even point every quarter, the rest, flows onto the margins itself. So if you could revise that for us.
Yeah, I think I'm definitely not going to, immediately say that, but I think it used to be about between 100 and 150 crores that we have crossed long time back.
Execution you do goes straight to the margin, to the profitability. And what do you intend to do in FY26 in terms of execution?
So what we have said is this last year we have said 900 crores, and we have said next 3 years we expect a CAGR of 50% on an average. Some year we may down, but next year we'll make it up for that. So we stand by that prediction even now.
All right, take that point. Thanks a lot, Mr. Atluri, for joining in and giving us an update on what's taking place in the defense sector. Defense stocks have been in focus for the last few trading sessions. But with that, we'll step into a short break. Before we do that, here's some good news. Network 18 has beaten Times Internet to become the #1 news publisher on ComScore. News 18 races past the Times of India to be the #1 news brand in the country. That's not all. Network 18 is also the #1 digital network in the news and information category as per ComScore report of March 2025. News18.com has 38% more users on native and social platforms than that of Times of India. As per ComScore report of March 2025, Network 18 is way ahead of the Times Internet with over 55% more internet users on native and social platforms. Well, it's a 22-point uptick that we're seeing on the Nifty. The mid-cap index is down about 0.15%. Nifty Bank is recovering from the lows. An interesting, insipid sort of day for trade ahead of a holiday tomorrow, but more importantly, ahead of weekly options expiry today as well. So there is consolidation for day 2 in a row for the market. The broader markets tell you that there are more stocks which are declining than the number of stocks which are advancing. And then you have the red and green crisscross lines moving further apart. So that's something we'll have to keep an eye out on. The Nifty Bank, there is a tug of war between what HDFC Bank is doing as well as what SBI is doing. So on the one hand, SBI is dragging it lower, while on the other, HDFC is supporting it. So there is consolidation at the index level on account of that. Let's keep an eye out on where either of these go to get a trend on where the market's likely to go from here. But for the Nifty itself, we're right in the middle of the zone. 24,300 put, fairly active, premium 10 rupees, 24,400 call, equally active, and the premium is close to around 9.5 rupees, which tells you that the street is expecting no major breakout or breakdown of this range from 24,300 at the lower level to 24,400 at the higher level itself. And that's what we've seen in the straddles, which are the calls and puts written together at the 24,350 mark itself as well. Though there has been a lot of punt buying at the 24,500 call this morning. So let's see where we go in the second half of trade. the real estate space. That is the toast of today's trading session. A lot of short covering in Godrej Properties and Prestige Estates. On the other side, a lot of long build-up that we're seeing on names like Macrotech Development and Oberoi Realty as well. Oberoi Realty, in its conference call yesterday, said that premium part of the real estate sector is doing well. So on the back of that, we're seeing some traction in names like Prestige, Godrej, Macrotech, the guys who deal in premium real estate itself. Ekta.
Okay, all right. So that's a lot of the real estate stocks which are in focus. But let's get a check on what's taking place as a whole on the markets. Pritesh Mehta, who's the Executive Vice President, Yes Securities, joins in on the show now. Pritesh, hi, welcome to the show. If you could just start by giving us a sense in terms of what your strategy would be considering the kind of slowness that we've seen, at least in terms of the indices. Would it be a more stock-specific approach now?
Yes, good afternoon. I think you got it right. See, we had a sharp rally on Monday, but we are still trading around the confidence of hurdle zone around 24,400, 24,450. And if you look at the top record in September 2024 till the low of March 2025, we are at a confidence of a hurdle zone. So basically, index has spent more time around this zone, and it won't be easy to take it out at one go. So I think that we are at a point of confluence, and with index, India is also trading at elevated levels. It is trading over 17. The breadth is a neutral zone. So in kind of scenario, there is no point talking about index. Index is not going to provide any kind of direction. It is a stock-specific market.
All right, stock-specific market. So Pritesh, get stock-specific. What do you have for us?
Yeah. So see, popular tires in fact, tire stocks are doing well, and there are several names from the tires which are popping up on our screen, and we like Apollo tires. So basically, we have seen a series of bullish data breakout coming in Apollo tires. Thereafter, in the first week of April till the second week or third week of April, we saw a strong up move. There is a bit of retracement and immediately bounce back. It is waiting to follow through the bullish anchor column. So buy for a target of 520. Stop loss will be around 450. The second stock is buy on Bajaj Properties. Yes, real estate has been the flavor of the day, and stock was in a declining trend from July 2024. But since Feb, it is creating a base around this 3-year mean, and now it is showing signs of breaking out of the base. So I think that there's going to be sharp follow through on the upside. So buy for a target of 2600. Stop loss would be around 2050.
Okay, all right, Pritesh, we're going to leave it on that note. Thanks very much for joining in and giving us your perspective. Well, as we take a break now, here is some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at just your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play. Just scan the QR code on your screen. Welcome back. Well, for the Bank Nifty, like we said, it's a marginal amount of pressure, but there's been some amount of recovery which has taken place on an intraday basis. Just want to point out a couple of these high volume broader market stocks which are moving. So there is a lot of action in the banking space. UCO Bank down around 2-3% odd. Punjab and Sindh, which is down around 1% odd. Federal also, which is sulking a bit, which is down 2.5% odd, and giving it company is Central Bank of India along with Bank of Maharashtra. Just want to point out that SAIL also is seeing some amount of profit booking today, so that stock is marginally lower at this point in time. Do watch out for Vishal Mega Mart because that came out with a spectacular set of numbers, and you can see that reflect on the stock price. Huge amount of volumes which are traded on that stock, which is up around 9% odd at this point, and it's gained around 13% odd this month itself. So doing well for Vishal Mega Mart. But let's move on to more earnings then, and this time from the frontline space. Bajaj Finance and Bajaj Finserv are under pressure after reporting their Q4 numbers. Bajaj Finance sees numbers miss estimates, while the management also trims its guidance for FY26. Bajaj Finserv's total premium has declined 9.65% from a year ago. Abhishek Kothari is here with details on the earnings.
Well, both Bajaj Finance and Bajaj Finserv reported their numbers yesterday. Bajaj Finance, the NI and PAT were a tad below our poll. However, the FY26 guidance is on the weaker side, and that's what spooked the investors in trade today. So take a look at the customer addition. It's expected to be at 14 to 16 million in FY26 versus 18.2 million that they have done in FY25. The AUM growth guidance has been lowered down to 24 to 25% from the earlier long-term range guidance of 25 to 27%. Net interest margin to remain stable as they expect the cost of funds to improve by 10 to 15 basis points in FY26. Fees and charges that will grow at lower than AUM growth of 13 to 15% in FY26. Credit cost to be in the range of 1.85 to 1.95%. Remember that in the previous year they have got credit cost of nearly 2% higher than their guidance as well, and this time around 1.95% continues to remain on the higher side as well. So return ratios have been lowered down with respect to expectation for FY26. ROA guidance has been cut down to 4.4 to 4.6 versus 4.6 to 4.8% earlier. ROE guidance has been cut down to 19 to 20% from the earlier guidance of 21 to 23%. With reference to Bajaj Finserv, the general insurance reported a weak show. Total premium over there was down about 9.65% YOY and 27% sequentially. In that, the gross written premium was down 13% YOY and more than 34.5% sequentially. With respect to the claim ratio in the general insurance, that saw massive improvement to 62.9% versus 70.3% on a year-on-year basis and 77.7% on a sequential basis. The PAT was down over there 4.5% on a YOY basis and about 9.25% on a sequential basis. With reference to the life insurance, that reported a good show. The income over there has increased massively on a sequential basis. However, the PAT was down both YOY and quarter-on-quarter. Back to you.
Take that point, Abhishek. Thank you for that. We're seeing a couple of, banking names pick up once again. So we have Axis Bank, which has moved to the high point of trade. Actually, it's moved into the green after trading the red for most part of today's trading session. So we'll watch out for the impact of that on Nifty Bank. And the second part is that I'm looking at, Maruti Suzuki as well as M&M. Both these stocks have surged. M&M at the high point of trade, but Maruti, most notable, it's actually the top Nifty gainer right now, up nearly 4%. Wonder what would have happened, just around that 1045 mark for the stock to have seen that kind of an up move. So we'll just keep an eye out on that one. And the third one is Varun Beverages. Remember when the results came out, there was a decline, and then we made a point that maybe the best is ahead of them, and the volume growth is up 15%, which is good. And the stock has recovered nearly all of those losses, back in the green for that stock as well. But really, the toast of today's trading session have been the real estate stocks. Macrotech, Godrej Properties, all of them surging. Prestige Estates up more than 2% after it's announced its foray in the NCR market. So what's taking place down ground on the real estate sector? Ria joins in with more details. Ria.
Well, a lot of real estate stocks are in focus once again today. First up, we have Prestige Estates, since they have announced their entry into the NCR residential market with the launch of the first phase of the Prestige City Indirapuram project. Now, the first phase of this project has a GDV potential of over rupees 9,000 crores. And once the second phase is launched, the GDV for the entire project will go up to rupees 12,000 crores. So this is a big project for Prestige Estates, which is why the stock is trading higher in today's session. Now, Morgan Stanley has upgraded the stock to an equal weight rating, with their target price actually being cut to rupees 1,370 per share. They say that the worst is behind for the company, and the recent RERA approval for this project could result in strong pre-sales in Q1 and Q2 of FY26. CLSA also yesterday maintained the outperform rating on the stock with a target price of rupees 2,380, which is an upside potential of over 80%. And they believe that this launch will lay the foundation for strong pre-sales in FY26, and it will also allay concerns over the miss in the pre-sales guidance for FY25. Remember, the company had only achieved around rupees 17,000 crores in pre-sales versus their guidance of rupees 25,000 crores in FY25, and the approval delay for this project was the key reason for this miss in guidance. CLSA has also said that they believe that the company can sell around 60 to 70% of this project in FY26 itself. Now, some other real estate stocks have also been in focus today, including the likes of Godrej Properties, Macrotech, DLF and Phoenix Mills, all trading higher on the back back of commentary from Oberoi Realty's management in yesterday's earnings call, wherein they've said that luxury is agnostic to the economy and they don't see any slowdown at all in the luxury segment. In fact, they've said that there is a large appetite for luxury projects and the consumption per person per square foot has also gone up substantially. And on the back of this, all of these stocks are trading higher by around 2.5% to 6%, with Macrotech and Godrej being the big gainers today. There's also some negative commentary for Oberoi Realty. The management has said that in the next quarter, there won't be any launches because of the monsoons, and all of the launches are going to take place in H2 of FY26 as demand picks up during the festive season. So that is negative for Oberoi Realty. The stock nonetheless is trading slightly in the green.
Okay, all right. Thanks very much for that. So that's Realty, which is buzzing around. But on earnings, we have Praj Industries and Vishal Mega Mart, which are reacting to their numbers, and that too conversely. We have Amakshi, who joins in to give us details on Praj, which is lower, and Vishal Mega Mart, which is higher.
Well, good afternoon, Ekta. Praj Industries, of course, came out with a very weak set of numbers. It's a miss across the board. The revenue saw a dip of almost 16%. The other expenses as well as the employee expenses, on the other hand, saw an uptick of almost 17%. Resultantly, the EBITDA margin came under pressure. Keep in mind that most of these expenses were in respect to the GenX manufacturing facility, which the company has scaled up. In fact, when you look at the net profit, that also saw a very sharp fall of almost 57%. On the flip side, when you look at the ordering activity, that was quite healthy. Order intake stood at 1,000 crores. They've managed to continue that run rate, quarter on quarter as well. 11.7% year-on-year growth is what we've seen here. Order backlog too stood at 4,293 crores, so good growth out here as well. But nevertheless, it's an execution-led miss this time around. In fact, we spoke to the management earlier on as well. 10% revenue growth and double-digit margins in FY26 is what they've guided for. They're maintaining 2030 targets of revenue of around 10,000 crores and 50% mix coming in from bioenergy and the rest from the other segments. Keep in mind, on the back of a weak set of numbers, we do have Praj Industries under pressure today. But on the flip side, when you look at Vishal Mega Mart, a spectacular set of numbers. Revenue growth was largely in line with the past performance, but the margin expansion was quite good. When you look at the revenue, saw an uptick of 23%. The margins have improved from 12.1% to 14%, and the net profit is seeing a very sharp surge of 88%. The internals as well look quite healthy, with same-store sales growth at 13.7%. The revenue from own brands increased from 72% to 73%. Sales from apparel were up nearly 26.5%, and the gross margins have improved substantially from 26.4% to 28.3%. So good set of numbers coming in for Vishal Mega Mart.
Take that point, Amakshi. Thank you so much for that. Vishal Mega Mart seeing a better quality of sales coming in from their own products, and apparel sales itself up nearly 9%. Take a short break. Here we before we do that, let's give you some good news. Network 18 beats Times Internet to become the #1 news publisher on Comscore. News 18 races past Times of India to be the #1 news brand in the country. That's not all. At the Social Plus on platform leadership network level, Network 18 is the runaway leader as per the Social Plus MMX Comscore report for March 2025, with 315 million unique views, which is 55% more than its nearest competitor, Times Internet, at 202 million views. News 18 also races ahead of Times of India in terms of Social Plus MMX cumulative reach. We have news18.com overall, which clocked 251 million unique views to beat the Times of India overall with over 183 million unique views. As per Comscore report for March 2025, even the social media metrics report says that Network 18 is 2 times bigger than its nearest competitor, with a 54% reach within the near 389 million overall social population. And speaking about Indian languages, in there as well, in terms of social media plus MMX cumulative reach, News 18 Indian languages is the leader in the category with over 182 million unique views as per the Comscore report for March 2025.
Welcome back. Well, let's talk about a couple of previews. Vedanta will be reporting its fourth quarter numbers today. Nigel is here with what to expect.
Well, that's right. Vedanta will be coming out with its set of numbers and we'll be speaking to the management as well. More than the numbers, the management commentary is something that we'll be tracking very, very closely. To run you through the big consolidated numbers, which include Hindustan Zinc, and those numbers we already have, and that's already in the price. Well, the revenue should jump up by close to around 10%. On a year-on-year basis, the EBITDA number as well will look quite good. There will be some margin expansion that we're working with. And profit number, remember, it's all over the place because Vedanta has a couple of one-offs below the operating performance. But the operating performance is something that we'll be tracking. So the higher volumes, both in Hindustan Zinc as well as in the aluminium business, that's what's going to aid the top line growth out there. The power business, well, it will be impacted by lower generation, but that's known. And from the steel business, we like to see some kind of improvement, particularly on a sequential basis. On a sequential basis, though, we'll have the margins that will contract a little bit. And that's because they source some part of their alumina requirement from the third party. And alumina prices did move up. Remember, as of now, they're much lower. But as of the past quarter, alumina prices were higher, which will increase the cost of production, which in turn will hurt the margins on a consolidated basis. The key numbers you need to track is the aluminium, oil, as well as the international zinc business. And all those three are up for you in the screen because Hindustan Zinc is in the price. A rough EBITDA number. You have brokerages like Philip, like Kotak that have given estimates. So that's why we have got those numbers up. That's the prime importance that you're looking at. Besides the numbers, as I said, we'll be looking forward to the timelines with regard to the demerger. The street is running out of patience because earlier it was supposed to take place in the first quarter of the new fiscal. Now they've guided for the second quarter, so we'll have to wait by on that. How is the promoter on the debt front and what is the debt reduction plans as well? Some kind of guidance for the remainder of this year. So that commentary will be monitored as well as the numbers. Back to you.
Take that point, Nigel. Thanks a lot for that. That's about Vedanta, the commodity company. But speaking about commodities, take a short break, come back on the other side. Manisha Gupta joins in with all things commodities. This time around, I think it is all things jewelry and gold because it is Akshaya Tritiya. Jitendra Vumidi, who's the managing director at Vumidi Bangaru Jewelers, joins in. Stay tuned. Welcome back. Looking at the markets, once again, there is a fair amount of consolidation, though a couple of these city gas distribution companies have spiked in trade. So we have Mahanagar Gas, which has moved to the high point of trade. We've seen some traction in Nippon Life India as well. And speaking about, tire companies, we have CEAT, which said that maybe in the second quarter of this financial year, they would see improvement in their margins. That stock is surging. Apollo Tyres on the back also is moving higher. We're also seeing some traction in United Spirits. But in high spirits is Manisha because it is Akshaya Tritiya. Manisha, the golden girl. You've been speaking a lot about gold, silver, increasingly. It's Akshaya Tritiya. It's all about you and gold.
Oh, thank you for that. On an average on Akshaya Tritiya days, you see 20 tons of gold being sold within that 24 hours. But the expectation is because the gold prices are at an all-time high, this time around it could be around 12 to 15 tons. Even that would be on the higher side, but the markets clearly are guesstimating at this point in time.
How many tons
Huge reduction.
do you possess?
Oh, yes. Slightly lesser than yours.
But that's a huge reduction.
It is.
Even the upper limit is 12 to 15, like you said.
Yes.
As compared to the average of 20.
That's right. 18 to 22 tons, but this time around they're looking at 12 to 15. So much lesser, but higher in value clearly.
I'm sorry, I don't remember this, but last Akshaya Tritiya, what was the gold price and how much is it now?
76,000. And right now it's at 98,000.
Oh my gosh.
We're looking at 23,000 of a jump up from gold prices.
That's a 30% jump, and that is offset by a 30% decline in the volumes itself.
Yeah, clearly that. But let's get in some more details. And joining us then is Jitendra Vumidi, Managing Director at Vumidi Bangaru Jewelers. Mr. Jitendra, thank you so much for joining in. What has been your sense? Because Akshaya Tritiya basically started from southern part of India, and now it is being marketed across India, auspicious day to buy gold. It's a gold festival of sorts. What are the kind of numbers? What's your sense on what buying could we see?
Thank you for having me on the show. It's never been a time when gold was cheap. It was always a time when, went into a store and you say, why is the gold price so high? This is something that we've seen over a period of time. Generations of customers come and shop with us, and they always feel at the time of purchase, the gold price was high. But later on, they are very thankful that they bought a lot of gold. And this is something that, generations down, we hear it. We hear stories that, we bought a sovereign for 80 rupees and today it is about 80,000 rupees. So that's how it is. And we are very confident that gold will do extremely well. because the price of gold is something that, it's a barometer against, how the economy is doing. It's if the economy is not doing well, then gold prices do go up. And we know with all the problems that there is in the global economy, there's a lot of, push towards gold, and gold prices will keep going up, is what we believe. And Akshaya Tritiya is one day where it's an auspicious day to start something. And the whole idea and concept behind Akshaya Tritiya is if you do something on this day, you will continue to do this through the year. So buying gold happens only when there's prosperity. So this is a great start to have through the year. So that's the idea with which Akshaya Tritiya is there. And I'm very glad that there is a day like this where actually, people do invest in gold. And I always believe that gold is a great security. It's something that, you would, it gives you the ability to take risks. So when gold is part of your portfolio, it helps you to take risks. So
it
this
does,
is what
and
I see.
Absolutely, Jitendra. We've seen those numbers play out well also. If you look at the dollar terms, we are up by 43%. Rupee terms, because the rupee is appreciated, we've seen 33% of gains here as well in the last 1 year. But what are people really buying right now with the gold prices so expensive? But I get your point. It's always expensive. But we are almost at around lakh rupees for 10 grams. So is it bars, coins, jewelry, lightweight jewelry, studded jewelry? What is it that people are picking up?
See, I believe that when the price of petrol went up, and we saw bigger cars coming into the market, so nobody actually worries to buy a smaller car because the price of petrol went up. So because of the price of gold going up, we have seen people buying larger items. Of course, the lighter weight items are the ones that they want to wear on a daily basis. But we find people who wear bangles. They want something that is sturdy, so they don't care about it being lightweight. They want it to be sturdy enough so that they can wear it every day. So there are different types of jewelry for different reasons, and we've not seen the diminishing quantities in gold. So we've seen gold quantities increasing year on year, and that shows us that the price of gold going up is in fact a reason why people buy more.
Okay. Jitendra, is there any new theme, new offering, new designs that you're putting out this year?
We are constantly creating designs. There's a big industry at work. We have designers like never before, and there's a lot of acceptance to new designs. So there's lots of new designs. We've started a new collection in gold and diamond, which is using mythological figures and beings. So something that, the most important thing is it all should tie into our traditions and culture. So that we found has a lot more, liking towards, and people love that kind of jewelry.
How are you looking at buying this time around? Because markets do believe that in value, we might be looking at a higher number, but the volumes could see us suffer. Are you looking at those numbers as well?
See, at BBJ, we are expanding like never before. So we are going to be buying more gold this year than ever before. So I don't think there is a reason for us to actually buy less. I agree with maybe there'll be maybe a small drop, or I think if you look at what happened in the recent 24 months, with the way the price has gone up, and they're expecting price to even go up further from this point. I think there will be there's a lot of confidence already in the market, and I'm sure the numbers will tell maybe in a couple of days from now.
So if somebody was to come into your store, what are the offerings that you're giving? Because all the jewelers that I've been talking to across Pan-India tell me that there are offers and schemes and making charging being waived, silver coin being offered, or complimentary gifts being added. So there is something or the other as a marketing, advertising, or brand building, even relationship building with customers happening. What is it that you're putting it out?
We are offering a discount in our making charges and value additions. Today is a very auspicious day, and we as an industry, we serve our customers extremely well. So we are competitive enough to give a great value to our customers. So I think gold buying consumers are very, very smart. They know how to buy. They have been in this for generations. They are coached by the elder generation, so they know what to expect when they come into a jewelry store. And it's very, very important that we give them the right price, the right product. And as an industry, we are doing great work. I'm very proud of what we do.
Youngsters forced by elder generation to buy gold today.
Okay, all right, Jitendra. Some things don't change, I guess. Just like a diamond is forever. But thanks very much for joining in and giving us that perspective. Manisha, before we go, if we have to have the same conversation, same time next year on Akshaya Tritiya, where do you expect the gold prices to be? Because it's already 98,000.
We've seen ₹1 lakh on the higher side as well. And everybody, Indian banks and brokerages and abroad as well, tell me that by next Akshaya Tritiya, you'll be looking at 1,10,000 for gold prices. So, well, this isn't such a bad price either.
Okay, all right. Well, thanks very much, Manisha, for joining in and taking us through that. We need to take a short break. In fact, we're going to wrap up on the show. Thanks very much for watching. This is Lunch Up Next.